Good morning, it's Jonathan Barratt with the morning debrief. It's the 14th of December, only short run towards Christmas, and the current time is 8:30. Quite an interesting Friday night's worth of trading, and quite interesting indeed. The Dow managed to close up 65 points, which was quite encouraging, and up 65 points, and S&P was up as well, so that's not too bad. The S&P in itself basically closed up 4 points. However, the Nasdaq was down a half, but the market was a little bit mixed. Overall, relatively positive data helped the market trade, and I think that in itself was quite encouraging. Production, housing, the starts, everyone feels as if the economy is starting to pick up, but we've got to ask ourselves if the economies are picking up, then why aren't inventories being drawn down? That's a little bit of time, a little bit of question for something else down the track. But in a nutshell, as we said, very positive close. The local market, as you can see, closed at 46.51, and that in itself could be probably expect to see a little bit of a positive opening, positive to mild opening in the local market this morning when trading kicks off. Quite a big move in the currencies. The big one being obviously the US dollar. The US dollar index continues to climb. That's something we have picked for some time. And as you can see, there's the big trend we've been following, and the US dollar index is obviously broken out there. Once again, had a very positive night on Friday night. And how did that affect us? Well, this is interesting because when we look at the Aussie, the little Aussie battler there, it's at 91.14, and we had a rate, obviously a rate rise last we heard from the Reserve, and this is the current chart of how the Aussie is actually trading. And when you do look at it, it sort of looks constructive, but these sorts of things start to sound a little bit scary in terms of we're still probably pointing lower to go lower. So I think I would be guided by how that Aussie will trade around this range as to see whether or not it sort of will start to move. But as you can see here, if it takes out that 90 area, it's concern, but at the moment it looks like the US dollar is perhaps just a little stronger. Someone please not log on when I'm doing that. Just got a little problem there with logging the system, so I'll close that down. I'll have to just reopen it again. So just bear with me. The euro 146.21, the dollar yen 88.96, and that was quite a large move. But as you can see across the board, we've seen the US dollar quite firm, and this is certainly affecting, I guess, the ability for some of these economies to really start to kick on. And but anyway, currencies, US dollar remains relatively well bid, and probably expect that to continue. One thing we do know is over time is each year the US dollar does get a little bit firmer, and it does run for a little while, and that's exactly what we're seeing at the moment. We're actually seeing that US dollar strengthen quite a bit. Also, it'd be interesting to see whether that Aussie can continue to trade as well, can continue to trend higher. But we've had 2 rate increases since those last highs, and that Aussie in itself has remained relatively stable and in that range. So if anything there, still need a little bit of a lift as to what's going to occur. Okay, now just moving on to the softs. And I think once again a little bit of a roller coaster night on Friday night, and I guess the important one there is with corn, wheat, and soybeans. They've all sort of come under or just mixed performance, and I think the big one there is obviously soybeans, which have come off their highs. But let's just quickly run through them. Just there we go. Wheat was up just a fraction, up a half at 537.5. Soybeans up 8 at 10.35. Corn was up 11.5 at 4.04, and coffee was down just a half at 1.42. Onto the oil, the energy sector, still relatively negative, and it's worthwhile having a look at a chart of the crude market. It still looks quite weak, and crude, we've got OPEC with their meeting on the 22nd, but we closed at the low of the range, and these sorts of indicators here, in my mind, suggest that we've broken through this relatively strong trend, so expectations are for oil to continue to trade lower. So that's still quite negative. Natural gas gave up a little bit, down 2.55%. So just a little bit mixed there. Copper was up a fraction, particularly taking heart of that positive data out of China. China's IP was up. They're expecting it to expand by 19%. And that was a very, very large number. But on the other hand, we haven't seen too many inventories pick up. Inventories continue to rise. They had no draws, so we've got to check that number. The other thing we've got to be careful of too is gold. Gold continues to come under pressure. And there we are. Reached our target of 1110, which we outlined 2-3 weeks ago now. And it sort of, once, let's see what happens. That 1,100 is the psychological level. So we really have to see whether or not it's got that ability to stay onwards and upwards. I think it's worthwhile thinking that, you know, if we go back and have a look at the crude market during that time of that big run, and then we can perhaps draw a parallel as to what could occur for gold. Look at that. I mean, it's dramatic. You know, 144 on all the way down to 35. Now, could that be the same for gold? Well, we hope not, but it's certainly something that that we can't discount, the fact that gold could actually fall out of bed. And, you know, that just serves to remind us, I think, of how volatile some of these commodity markets are. And I think when you look at that example of crude, where we're up here, everyone was looking at 150, 200. Let's get ready for it. But a lot of us thought it was not achievable, and look how fast it came down. Anyway, so let's just keep that in the back of our minds when we're thinking about gold and gold investments. Here it is here. The market is long. One thing I have, and I'll reiterate a few times, is that there are more retail people that have access to gold than they have in the last 10 to 20 years. And this provides me with a concern because, as you remember, SPDR lost 11 tonnes in one night. That's just over 1/10 the size of the holding, 1/10 the size of the holding of the IMF sale to India. So 10 days of that, and you've got a lot of gold that's been disposed of. But keep an eye on that. Things still look weak there, so I would not be too hasty about jumping into gold. Right, silver also closed down 1709, so that in itself looking a bit negative. Okay, now just quickly, without looking at all the markets, and I think the most important ones there we've covered. Local share market here, let's have a quick look at where we think things can happen for it. That's a weekly chart, and I think the expectations we have there are still within that triangle. Let's see what occurs there. If it takes out the bottom end of this area, it is a worry, but if we just keep on going sideways, which is up a third view at the moment, then we could see things start to pick up. So that's what I really want to wait and see. But at the moment, local market expected to open up a little bit better bid today, and let's see if we get some follow through during the week. Big numbers this week, particularly in Australia. We've got GDP. That'll confirm exactly how we're going, how the economy is moving. A lot of us are actually expecting some good stuff, expecting some very positive stuff out of the next quarter. But let's see exactly what mode is on. Not a lot of data out today except for Japan, which is the IP following after China. So let's see how that. We might get some negative fallout out of that. And that's one of the worst because we're thinking that Japan itself can slip back into recession, resulting in a W style of recovery. So let's just see how it goes. Condominium sales down 20%. Things aren't that good. So they'll be out later today. And as I mentioned, the most important ones, we've got PPI during the middle of the week for America, the TICS data, capacity utilisation. So I guess leading into it, Tuesday is going to be quite an eventful day. And as with Wednesday, we've got GDP in Australia, which is going to be very important, and CPI. So there's quite a bit of data out this week, and it could give us good clues the direction for the economy in the next quarter. Well, that's about it from us. We'll talk. Hope you have a good day, and we'll talk to you soon.